So I'm really excited to be bringing you guys this story. We're diving deep into the numbers unlike anything we've ever done before, and specifically what this story is 16 units, 87,000 a unit, and we're talking 90,000 net operating income. Let's get into it.
Like we had one gang member in there, and like the building was all tagged and stuff like that. So whatever, or not the building, but the unit. And we had a coat of paint, so $800, took care of it. But yeah, just good learning lessons moving forward. And yeah, there was a lot of learning in it, and it was awesome. We had a lot of fun when we did it. And every deal is going to be different. Like if this was a 100-unit building, it would have been a lot less than 2.5%. I'm a huge advocate for taking your time and really learning the ins and outs of everything you do and building out the foundation so that you can just springboard from there.
How do you structure a large apartment deal? Well, in today's video, we're going to dive deep into that subject matter with Fraser Nybo. Now, quick heads up, this is part 2 of a 2-part video series where we really discuss all the intricate details with Fraser in regards to how he structured buying his first 16-unit apartment building back in 2019. Now, it didn't go exactly according to plan, but he was able to pivot and figure out a solution and make it work. And this to me is a perfect representation of the philosophy of problems or profits. So I'm really excited for today's video. I think you guys are absolutely going to love it, and make sure you watch part 1 if you haven't done so already. But let's dive into part 2.
And so mentioning or talking about a third-party property manager, up until this point, had you been managing all your units? Was this your first foray, like outsourcing property management?
Yeah, so I've had property for about a decade now, and I've been doing a lot of my own property management. And that doesn't mean I go and do toilets and stuff anymore, even though I did lots of toilets back in the day and just everything that goes with that. But I hire, like we have all our trades from the flips, and we just run them through the rentals as we need kind of thing. And, but I have been doing tenant relations. So it was a newer experience working with third-party property management, but it's been going really good so far. There's been a few little things that that I didn't know about, and stuff that was in the contract that I didn't know about, that they didn't tell me about. And I asked directly like three certain questions in an email, and they just kind of skirted the question, and they actually came back and I caught it. But yeah, so there's lots of...
Any lessons there that you could share with us when it comes to hiring your first property manager or outsourcing property management for the first time?
Yeah, just do your research. Make sure you talk to lots of other investors in the area. Go off referrals. Referrals are huge. So that's what we did. We actually had a referral from some other investors in the city, and we actually got a little bit of buying power with them because we're essentially a little group. Like we're actually all part of the real estate investor group in Saskatchewan, RIGS it's called. And yeah, so definitely do your research. That's number 1. And then number 2, make sure that everybody's rules or everybody's jobs and everything are laid out very clear. The fee structuring, that's huge because everybody's so different. Some people, they charge like say a 7% management fee or a 10% management fee, and then they'll actually charge like a admin fee or a service fee or both. So with ours, we actually have 7% gross rents plus a $300 service fee per month, and that's like admin. They call it a service fee, but it's administration and everything that goes with that. And then find out what's all included with your management, like what's all included in that. Just ask the direct questions. Don't be afraid to, it's like talking to lawyers or anything like that. If you're not used to working with a law firm or you're working with a new law firm, a lot of people are scared to ask questions and ask like flat out, how much does this cost? It's like, I don't know if it's an intimidating thing or what, but it's the same with property management. You need to be very, very upfront, because there's a clause out here, and I don't know if it's out there, but it's basically if a tenant walks away from a contract, like say whatever, they're tied in for another 3 months and they just walk away and they don't actually pay rent the next month, we don't actually have gross rents coming in, but on the management books it's counted as gross rents. So we actually pay 7% of that gross rents. That's one of the like really small things that you wouldn't catch. And it was actually one of our, like somebody on my bookkeeping team, they caught it, and there was a $50, it was like a $50 whatever discrepancy. But I ended up going in, I had a 2-hour meeting with management over that and a whole bunch of other stuff that was happening in the building. And they basically explained it like, that's how it is. That's how we account for our risk. So it's kind of a funny business. They get paid when you don't get paid. So you have to be aware of it and really, really, like I said, keep good communication with them.
Yeah, understanding the devil's in the details for sure.
Yeah.
So
Yeah.
with your third-party property manager, is there a separate filling fee, or is that included in the 7% monthly, like when they're filling a new vacancy?
It is included until you have 5 vacancies. And if you have 5 vacancies, they bring on another additional person for $500 a month.
Interesting.
So, yeah.
I haven't heard it exactly explained that way, but
Yeah.
and so what are your thoughts in general? I've found, and this is just kind of me talking from personal experience now, but I've certainly found that there's good companies that are good at property management, and there's companies that are good at filling vacancies, but it's a real struggle to find someone that's good at day-to-day management and filling vacancies. Do you feel like the property management firm you found, are they able to straddle that divide, or, how is it compared? Did you have to adjust your expectations for what Fraser would do versus what they would do? Because certainly I know here in Ontario, I would in general probably estimate 15 to 20% less in gross rents if it's going to be a third property manager than that, independent property owner that is watching it like a hawk. Like Matt McKeever circa 2010 would definitely get 20% or more in gross rents than what my property managers do today.
100%. And that's actually a really funny question, because what I'm dealing with right now and how I've actually structured it with the management company, and they are really good. They're really open to flexing the management however we need it, kind of thing. So I do like working with them for that. They're great with tenant relations. Through this whole pandemic thing, we're getting more rent than we've ever got, and kind of like everybody's paying, everybody's super happy. They're
Nice.
really good with the tenants, really good at keeping relations. And the woman who's the boots on the ground, she's awesome. She's really good at her job. But where the lacking part of the deal was, or that wasn't up to my expectation, was the maintenance. Just because the volume of deals they do, say they have 500 units or whatever it is, they just have X plumbing company. And that plumbing company, we see this in the flips. It's called price creep. And essentially the trades, after a while, they start just slowly creeping their price up, whether it's a countertop or a kitchen or whatever it is. And I'm sure that's what's happened with them. And I've told them flat out, I think that's what's going on, because we've had it happen a couple of times that I've caught it, like plumbing issues that are coming in double, almost triple the price of what it should be. And it's a big problem. They have that, like I said, they have just a lot of buildings. They don't know what things should cost, essentially, and they just let the trades run, kind of thing. So there's nobody to really essentially rein them in. Gotcha. So that's what I've been doing this last year, pretty much. Like I said, I wanted to make sure that I had everything set up how I needed it, so that I could really expand. Like my goal is to get another 100 units this year, but I haven't bought anything since. I've been working on lots of deals, lots of multifamily, like communication with owners and stuff like that directly, but I haven't pulled the trigger because I don't have this sorted out in my business yet, which takes a lot to say, because everybody wants to be like, oh, I'm going to grow. But, but yeah, definitely maintenance was number one. And if you have time, I can tell you a good story, actually.
Let's hear it. I'm sure the audience would love to.
Yeah, so what was it? I got a phone call one day, and actually I have two stories. So I got a phone call one day. I was in the backyard, like at my house, and pump on the boiler blew up. So I asked management. I was like, well, what did it quote out at? And she was like, oh, $1,200 plus GST, PST, whatever parts. I was like, okay, well, just hold off. I'll go have a look. Or I was going to send somebody by, but it was like the weekend or something. I couldn't get anybody. So I actually went and had a look myself. I went in, and it was actually just a coupler between the motor and the pump that blew up. So I actually, I have a pretty mechanical background, so I think I'm pretty mechanically inclined. So I called my plumber friends and plumbers that we use in the trades. I was quizzing them up, like, what should this be costing, just out of curiosity. And they said, if you need a new motor and you need a new coupler, the coupler is like $80. The motor, I don't know, $250, $300, plus your 20% markup, plus maybe an hour to change it, hour and a half to change it, hour and a half max. So they were like $500, $600 maybe. And this would have been 14 after GST, PST. So like after taxes. So I ended up, we had all the parts. The motor was still good, actually. So they didn't even have to change that. So that was shaving $300 off the bill. I did have another motor, so I like in the building, so I actually put a new one on, and I brought the old one home and tested it, and it was fine. There was this $80 coupler piece that blew up, and they were going to charge us like whatever $1,400 for that. So and it took me an hour and a half to change, and I made a Home Depot run it in the meantime just because I didn't have my hex keys on me. And so on the way home, after I got it running, I called the management company. I was like, just so you guys know, that's ridiculous. And essentially what came out of that conversation is that the plumbing company is not allowed in the building anymore, because this is the third time that's happened. And one of the stories before this is actually there was a leaking stack in the building, just a slow drip that was dripping down into the laundry room. And they were going to be there Thursday at 8 a.m. So I ended up showing up Thursday at 8:30. And I tell the guy that's doing the work, the plumber, same company, that I work for the property management company and I'm just here to give you a hand. So he doesn't know I'm the owner. Yeah. So I go in, I'm doing all the work pretty much. Like I'm cutting all the walls open, and he's just kind of inspecting stuff, and we can't find the leak. So what it was that we figured it was the flashing up in the roof. So what I did is I actually went and I tied a rag around it and kind of dripped it over the insulation. There's insulation around the pipe, just as a short-term solution to see if that was the problem. And then if it wasn't wet for the next week, then we know that's the problem. So we go up and change the flashing. So I don't know, he left at about noon, and he did do a few little things just with heating in different units and stuff like that. But a little while later, I got a bill for about $1,200. Or no, it was like $1,500, that one. And I even warned the property management company before. I was like, I was there with the guy, and this better not come in very high, because they didn't do anything. And then sure enough, the bill came back at $1,500. So then I called her right away. I was like, you need to send me all invoices for all this company since we've had the building. So then she sent it over. And what it was, actually, that one wasn't bad. It was actually a bunch of other jobs from other days and other weeks. It was like 2 months worth of bills backed up. So that bill, I think that one was $600. So it was actually pretty accurate for the amount of time that they were in the building and the work that they did in parts and stuff like that. But just the initial shock of seeing that $1,500 bill for what they did, like he tightened the toilet seat and changed the valve pretty much, It's but that stuff happens, and it happens all the time. So I see this, and then I wonder how many buildings in Saskatoon are actually getting ran away with. Yeah. And like pricing is just out of control. If you let these companies go, they will absolutely spend all your money. They just think it's a license to print money a lot of the time, and it's your job to keep them in line and rein them in. So that's where my biggest problem was with third-party property management. So how we have it set up now is I'm first call, and we're hiring people now. So I have a right-hand man, and all calls go to him first, and then we see how it is. We send our trades in, and then if it's something that we don't want to deal with, we can send in property management or their trades kind of thing. So that's how we've set it up. But yeah, lots of learning. It's good though. It's all good learning. It's good to get all this stuff straightened out. It takes time, but yeah, it's awesome now.
Do you want to get control of your financial life? Do you want to crush it in real estate with wholesaling? Do you want to join my full-time team of wholesalers like Mike or Shahir? Or what about Tyler or Diego? Or what about Amar? All right, and what do we do, boys?
We make offers, we buy fast, never gonna miss a deal cause we pay cash. Offers, 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 deals, deals, deals. Tell us, Mr. Seller, what price do you feel? Cause we're Southwestern's biggest source of deals. Boom!
So if you guys want to crush it with wholesaling, you need to join my team. And down below, video description, there's all the links you need.
Yeah, lots of learning. It's good though. It's all good learning. It's good to get all this stuff straightened out. It takes time, but yeah, it's awesome now.
Yeah. Appreciate you sharing those stories and those tips. I'd love to circle back and talk a little bit more about corporate structure and just how you're structuring your partnerships and things of that nature. So I'd love to hear, originally you had set up buying this apartment building with the plan that you would own 60% because of the VTB. Eventually you ended up having to, sell off more equity in the apartment building and ended up with just a little under 40% overall ownership. Now, do you guys have a specific business model that you're aiming towards, such as, and I'll share an example. So I've got a corporation that only buys apartment buildings as well, similar to what you're doing. and we kind of BRRRR those apartment buildings. And so one of the rules we've kind of got in place for ourselves is we ideally never want to sell more than 30% equity in the deal. But technically, as long as we have 51% equity, we're okay moving forward. But in general, we're going to try and limit it to a 30%, and where we keep 70%. I'd love to hear, do you have kind of a general guiding principle? Do you have a hard and fast rule? Is that going to evolve over time? What's that look like for you?
Yeah, so it's always evolving. But what we're going for is like how the original deal was structured. I don't want to give away more than 60% of the deal moving forward. Just from a financing standpoint, it's just more simple, like it's simpler for everybody. On this one, we did give away a lot of the deal. We probably could have got away with giving away, like I could have funded it at giving away 10% for 100,000, just because there was so much equity on the buy. But 60% is going to be our number. But we also do debt style investing, so use the debt method. So essentially, people with RSPs or anybody with just money in a registered account, they can invest with us, and we have to pay a set interest rate. And on the multifamilies, we're trying to keep it around 6%. We can do 8% on some buildings, but so it's basically the two models. We will do debt, we will do equity on multifamily apartment buildings, but and those are kind of the parameters on that.
All right. And so another thing that I'd love to explore with you, I find a lot of investors, whether they're brand new and trying to buy their first duplex, or whether they're trying to kind of evolve or, get into that buying apartment building phase of the game, when they decide to break into a new business model, they're sometimes overwhelmed because there's so many options available. So do you kind of have a buying criteria? And I'll share, for example, like one of my buying criteria, as well as Casey Wong, who's been on the channel in the past and buys apartment buildings. Both Casey and I hate the idea of owning buildings with elevators. So we're kind of always looking for 3-story walk-ups or smaller. For myself, specifically, we're always looking for a certain population size center. So we don't want to get into really small towns or like dying communities, even if the ROI or cash on cash looks great. We've got certain benchmarks that we're using as well to determine whether a property makes sense for us. And in general, our business model is BRRRRing large apartment buildings the same way I used to BRRRR my small duplexes. So do you have a very specific set of criteria you're looking at in regards, or any rules of thumb when, determining whether you should do more due diligence or go deeper on the negotiation?
Yeah, definitely. Like we have our target areas, and like we'll start from a high level. We've had property in Montreal, Quebec, and Saskatoon, and kind of all over. So like take Saskatoon for an example. I've built it out, so we're targeting 1960s, 70s, 1980s apartment buildings, 3-story ideally. I'm not opposed to elevators, but the numbers would have to be right. Like I said, for the right price, you can buy a lot of stuff. But yeah, so 1960s buildings. And what we're finding with that is a lot of baby boomers in Saskatoon are actually looking to sell. So you have the center core, you could call it, and it's surrounded by the main highway going around Saskatoon. And then on the south side of the highway, there's all these new builds, a ton of rentals in there. The downtown core over here is starting to really ramp up. And there's just a lot of new building going around there. So these 1960s, 1970s buildings in this area are getting like hurt pretty bad. And this is all pre-pandemic. Like this has been going on for a long time. And it's these owners, they're running extremely high vacancies, and they're not keeping up on rents, and maintenance is going out. We're exactly like you're saying, we're targeting these buildings that we can have a huge value add, like essentially B-class properties with a value add option. And there's some pretty substantial gains in those buildings. And especially with our flipping side of the company and the design side of the company, we can go in and we can turn these properties over quickly. So those are the conversations that we're having in our market right now, and that's what we're targeting. But eventually we're going to start moving that model out into other cities. We're already starting to look at Calgary and Edmonton, and Calgary will probably be the next city that we move into in the multifamily space, just to geographically diversify. And then I think that's extremely important. And we saw that with our place out in Montreal. Saskatoon values were going down pretty substantially, and we were having huge appreciation gains in Montreal. So if you can do that on a large scale, I figured it out a little while ago, just understood how just everything compounds with multifamily. It's so powerful, and people do not understand that. Like a lot of people, when you structure the deal, like you were saying, you wanted to touch on that a little bit more. When you structure the deal, if you give away even 10% and say cash flow is $400 a month for $100,000, they don't see the whole picture, and it's really hard to explain to some people exactly how big that pie can be. So yeah. So back to your question, though, those are pretty much the questions that are the properties that we look for.
Okay. And are there any certain like benchmarks or rules of thumb? Like, is it a certain cap rate? Is it an IRR? For example, I know some of my commenters love to hate on me because they think this is too simple, but legit, we're still buying essentially 1% rule apartment buildings. Like when I'm quickly doing my back of the envelope calculations, when someone's like, hey, Matt, I heard about this 30-unit apartment building, my question's immediately like, what is the gross rents and what's the purchase price? Yeah. And like from that, I start modeling based off of that. And I don't necessarily need a lot more information to decide whether I want to dig deeper or whether, there's not a chance in hell this deal is going to work.
Yeah, that's funny that you say that, because I was just actually looking at that the other day, and that building that we bought, it's pretty much at the 1% rule. Like we're grossing almost $14,000 a month, and we paid 1.4 for it. So that's funny that you say that, because that's definitely something that we look for in future buildings and buildings that we're looking at right now. And yeah, I could see how people think that it's oversimplifying, but it's just like a quick way to burn off all those properties at the top of your funnel and not waste your time.
Awesome. Well, I'd love to, kind of pivot here and explore, you've got your apartment buying business that you're looking to grow and continue and, try and get 100 units in the next year, which is amazing. But at the same time, you've still got your flipping business, right? So I know last time we were out and hanging out, we checked out a handful of different flip projects. What's it looking like for the flipping business? Have you had to put that on hold while you're doing the apartment buildings, or doing both at the same time?
Oh yeah, no, we're running them parallel. We have a whole bunch of companies on the go, and there's more than that too, more than the two companies that we just talked about. But yeah, the flipping company, so we kind of pivoted that too, actually. So a little bit pre-pandemic, we decided that in our market, there's a lot of people looking for the properties that we've been buying at, say, the $250,000 price point. And I'm talking 3-bedroom, 2-bathroom bungalow, 1,100, 1,200 square feet, just typical normal house. And there's so many buyers in that pool looking for properties like that. So you have to go off market. So we built out this whole thing off market to bring those properties in. And essentially, instead of having to go to people on the MLS, we have people coming to us. So we have a lot of leads coming in off that. But we've actually repositioned and redirected, and now we're targeting building properties a little bit higher end. We're looking at that $400,000 price point starting, and then we're looking for like all good mechanical, all the stuff you look for that you have to spend money on that people don't care about, siding, shingles, furnace, water heater, windows, all that stuff. So we're actually moving over into that direction. So that's interesting, and that as a business is the clients that we want to serve also in the design side of the business. So that they're kind of complementary. We're trying to bring customers from one side of the business over to the other side. So I still do buy call them the lower end properties, and at the $250,000 price point. So, but I've been getting more into like wholesaling these properties and not necessarily flipping them. We still have lots of renovation projects on the go from clients and stuff like that, and we're getting into the higher end flip. But these lower end properties, I'm finding that I can turn them over quicker and make the same amount of profit by doing less with less time, essentially. So just the velocity of money.
Thanks again to Fraser so much for taking the time to break down in such detail his experiences when it comes to investing in apartment buildings. Now, I know you guys love it when we talk about investing in apartment buildings, so if you want to watch more videos with Fraser, check out this entire playlist with Fraser discussing his apartment deals. If you just want other apartment deals, check out this entire playlist with Casey Wong. We've got a lot of great apartment buying, real estate information here on the channel. Hope you guys are enjoying it. If you are, smash the like button, hit the subscribe button if you're new to my channel. I'll see you in the next video.